Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go. So BTC getting tight in a range here as they consolidate and induce some liquidity on this low liquidity weekend, Sunday, December 17th, as we start to wick beneath this 42,400 region on a daily time frame, which is a bunch of range bound points in time where the daily time frame closed of interest, most notably at April 22nd, 2022, where it dropped down from there. All right, so do we start to get a little bit of a bounce here as the weekly candle closes, as we suspected, possibly coming down and then going up for a double top and then promptly going down to release that pressure? I think we need to look into high block. What is high block? Well, people lock that liquidity into the charts to get burned to a crisp by the market maker for not using a stop loss, and we get to see where those crispy characters are. So let's do it now. So the 1 minute time frame, not really bringing so much to the table here over the weekend. It is low liquidity weekend, so we expect not that much to be induced. They came down and gobbled up these basically $90 million in longs that opened up into resistance here. And then as we're starting to come down here, there is some shorts opening up down here, so they could spike up and grab these at 42,553. Overall, there is a little bit more of a thicker band down here on this wick recovery that we were talking about from yesterday. What are we talking about there? We are talking about coming down to that 786 region down here. There's a 786 retrace for you down here at that 41,100 region that we could come down to. Possibly recovering this wick and doing an inducement pattern right here to get some longs to enter. So I have limited time today to give it a thorough analysis, so it will just be a brief update to edit what we were saying from yesterday, because things change. So let's go see how things have changed. I don't think we need to go explore the higher time frame. We already know where that 45.5 pool is, but I will pull it up for you basically on the monthly here. So the monthly time frame has this liquidity zone up here. If you look up in this 45.7, 45K region, we have a thicker band up here that they could tap up into for that last hurrah up to that higher high region, sweep those shorts, and then promptly dissipate. This impulse does insinuate that it wants to go there. If we use this trend-based fib level and we just take this impulse to that retrace of that wick, we have this 236 level at 42,100. If we can maintain 42,100, we could be seeing those range bound prices up in here on the 45,452 level in this deviation of this impulse. So we could get some little scam grab of liquidity down here before they start to go up here. So that's what we're saying. Wait for that 786. Perhaps it could be inbound. Let's go ahead and take a look at the time frames and the momentum, and that is the Q. Link in the description for more. You can scroll down to the features, toggle everything at your leisure, or read about all of the things that are relevant as they become prominent in the charts, the trend cloud, the baselines, the stochastic array, dynamic alerts, and more. So let's go ahead and start to turn that on and see what we can see in the charts. Okay, so one interesting thing I've been seeing of note is we reclaimed this cloud. Last night we had this cross-up event of the hourly time frame here. We started to close candles with this wick instead of come down to here. After the live, we started to reclaim it and start to cross up the hourly time frame, and then we are now starting to cross down. So if we start to break down here at this cloud and start to accelerate below that, then we could be getting this drop to the downside. So we came back, tapped into the bearish super trend on the hourly, got rejected, and are starting to cross down on the baselines here on the hourly time frame. So let's go ahead and shift time frames here. We'll start from the daily and make our daily descent as we do. So once again, the thing we were talking about looking at and keeping a mindful eye over was this 3-day cross down event. What do we mean by that? Well, this little baseline crosses over the thin boy, crosses over the thick boy, and backtestably true. You could go back and see this on a fractal level. Every time this happens, we have a massive pullback on the 3-day time frame. For the most part, granted, you have some fake outs, but even with the fake outs, if you look on a larger time frame, it is a larger pullback if you think of it in swing terms. Same with this cross up event, which we were looking at with our rocket ships down here in September 13th. It was actually September 11th when we were getting the rockets. We got the cross up and boom to the upside. And we were looking at a potential one which did not close on the 3-day here, and because it did not close, we were not interested. So if this closes, that will percolate some interest for a swing roundabout to possibly come to the downside. Once again, this closes as the weekly candle closes in a day's time, so watch out for that. How does the weekly candle close? That is the question. And looking at the oscillators, the KD lines are coming down on the stochastic, money flow above the RSI suggesting fatigue, starting to get an alarm cross of the Williams, and seeing the last time we had that was something that happened there. Even on this first cross, we did have something that took us down a ways back in March to that 618 bounce during the Silicon Bank failure, I believe. And yeah, let's go into the daily time frame. The daily time frame possibly getting a suppression of the KD lines by the Williams here as they attempt to cross up but meander around in this oversold region. Looking at the cloud and whatnot here, you have the cloud starting to taper in a manner here on the daily time frame, possibly insinuating a tapering effect of the baselines here. The trend cloud. The baselines are crossed down here since basically the dump last Sunday, and we are seeing that steady suppression by the baselines to the price. And if we go to the 22 here, you're also getting this suppression of price by the baseline cross down event back here on Saturday of last week, which we had you at hello on for that nice juicy short to the downside. So if we go to that 22 hour, still pointing to 2 o'clock, have yet to taper on the 22. If we look at the 22, it is getting that curveball. We talked about this disparity. This is what we're talking about, this disparity between the money flow and the RSI. When the money flow comes beneath the RSI, expect a insertion of value, which it did. So here it bounced back up because that disparity was there. And then now you're getting this back to even Steven levels on the 22. Does that mean this saw its time in the sun and it will come back down? Suppression of the Williams could be inbound here to take this down some more on the 22-hour time frame, the broken time frame, hidden footprints of the market maker. If we look at the 12-hour here, also getting this curveball effect of the money flow beneath the RSI here. So this disparity insinuating that there is some sort of bounce inbound up to that region. The narrative structure coming to this higher high level is something we are interested in thinking about. And so does this, you're making a higher low but a lower low on money flow. So this is some hidden bullish divergence that is percolating here if it does get a bounce up, because you have a lower low, higher low, higher low, lower low. So this is the hidden bullish crystal that should appear if we get this bounce up. If this becomes a sell-off wick to pressure all and stop out all the late longers up here, use their sell side liquidity to insert a heavy position up to this level for that weekly candle close, that is something we will be ready for. And looking to that 6-hour time frame, we are breaking beneath this cloud. In trend cloud we trust, so the trend cloud is not holding here, so we are not slated to go up to here just yet. Coming down to this region, hitting that 706. We hit the 618 3 times, so that's why I took that pocket off. We hit it here initially, came down to the 706, and then bounced off of that, hit the 618, hit the 618. So there's a lot of 618 traders. So there's a lot of traders that are playing this range. What do I mean by inducement? Well, let's go into an entry model checklist here real quick. So if we pull this up in context here, okay, so it comes down to the, that's a model 1. A model 1 is like a clean bounce off of that rate region, but we're looking at a model 2, an inducement model. So this inducement model is right here. So it does a little shallow bounce off the 618 and builds some liquidity, boom, boom, but it can't get above where it's looking to go, so it does a deeper retrace down into that 786 level and then rips it up. So this model 2 level, we have a break of structure on this idea here of this downside rip. Technically we haven't broken anything but this little range over here, but on a minute shift level it is what it is, and we are coming to those things. So you wait for that optimal trade entry level, and that would be the sauce here. So the cloud on the 6 hour looking still bearish and suppressing the price on down. So if you are in a short, you can rest easier and set your stops to the first line of defense for now, and going lower into the 4 hour. Interesting thing to note is the 4 hour cloud. We are above the 4 hour cloud, and the 4 hour cloud is thinning and holding. So is there the selling pressure is abating on this volume weighted cloud, and we are above it. So this is something to think about. The volume weighted cloud formula, which expands and thins according to the amount of volume present in the asset. So what is present is less selling coming in here as we make this curve on the 4 hour. Does this 4 hour manage to close above the cloud here and reclaim it? We came beneath it, came back up, coming back down to retest perhaps. Okay, and looking at the 4 hour time frame here, let's erase this. We saw that disparity on the 12 hour, that subtle 12 hour money flow disparity. Does that come into play? Just like this one, we had the money flow come above the RSI, we had some bearish divergence and boom, dumped back down. Are we going to get this to come up here on the 4 hour? 4 hour time frame is one to note. Still, you don't have the 6 hour on your side, so you're getting a little bit of ambiguity, some streams crossing in opposite directions for the ideas to match, one of which being this baseline crossing down while you're holding the cloud. So which one do you believe in? I personally like these ones where it's crossing up and the baseline, and this is in your favor. This is more likely to have momentum behind it. This one here is ambiguous, so this is not my optimal idea. I like to get down in the dirt and see when these are in our favor together. Super trend, baselines, trend cloud. This is the Momentum Master Trinity we have a short on about. So when this is in effect, that's when we think to get this little push up. So here is a little bit more of a tricky range that I'm not as interested in. We will see if it comes down for a liquidity grab, whether that changes my tune or not. But as of this moment in time, I am not interested in this range. This is a trap/idiot box to trap people in on both sides. So let's go to the deep retrace because we have negated that 618 now. So coming down to here. Okay, so yeah, basically unchanged from yesterday. No change in the draw on liquidity. Do we come down and sweep this up off the table and come up to here for that weekly candle close? Could see some nice manipulation, recovery of that wick, come back up. That's basically it. That is my story, and I'm sticking to it. We're still above the 12-hour cloud too, so the 12 and the 22-hour cloud still holding their price. So even if we wick down into here and get bought back up, that is a possibility of going higher. Let's go ahead and look at the questions you have or may not have. Anyone? No. If not, then we will bid you adieu, make it short but sweet for the update here. Total also having this rejection off the 706. Coming back to the 236, if we hold $1.55 trillion, then we could be going up into these ranges. Total 3, getting a little bit of a bullish side as Bitcoin goes sideways. The alts get time to play ball. So as suspected, ICP, File, SHIB, BGB, CFX, Clay, Atom, Pepe, all these ones running around on the side while Bitcoin goes sideways, getting a little bit of plays to the upside. And yeah, I think we were looking at Matic, so let's go see how the Matic analysis played out. So we were talking about possibly getting this breakout idea, but essentially coming down into here, the low, and this was as Bitcoin retraced on Thursday, I believe. So if we look at what's happening here, we basically broke down. You got this cross down event of the 6 hour here. This is why I don't use patterns anymore. The patterns are not conducive of price action. They are after the fact. We talked about it being after the fact, and that's why we used it. So either way, the cross down event of the baseline here starting to come down here for Matic. You're getting this 6 time frames oversold. What was that? That was the 4 hour time frame. So we were talking about the flash point here. We were saying if you can't get candles above this cloud, this is insinuating more downside. So that basically came true. We did close beneath that cloud and got some acceleration down to 7 time frames oversold. So Matic getting primed up if Bitcoin plays ball to come up into these regions. We were talking about that possibility. We can move this on over. The 236 is your guide, this 83-cent level. Do we maintain it? We came down to it. If you had set limit orders at that region we talked about, you'd be in smooth for the taking. And waiting for this cloud to abate. It looks like it is thinning now. So this possibility of this being shifting here, we could get a little bit of a shift on the 4 hour time frame if we start to burst above it on Matic. So you're starting to get some wackiness on the 4 hour time frame in terms of the cross down events. Hourly looking to come down and retest here. If we look at the 6, let's go to the 6 hour. 6 hour cross down event still in effect. Waiting to see how this daily candle closes and how this 236 holds for Matic. Can you get a bit of a bounce-a-roo coming up off of the 236? This is also an equilibrium level of this impulse, so it's possible that we come into a pocket here. We have previously broken down and kind of wicked into that, but we did not come down entirely. Wait a minute, this is not accurate. There we go. We did wick into the 618 once, so we could do a little bit of a slide grab down to recover that wick, just like BTC down in here. So it's possible you could get a drop with BTC down to here before going up into that region. 6 hour cross down event is in effect, and this is starting to turn to the downside, so you could be getting a bit of a downturn on that 6 hour for Matic. Dixie getting a bounce off of a level here. What is this? The 706 of this deep retrace region for this impulse to the upside. So do we get a little bit of a bounce, or is this a deeper retrace down to the 786? Risk on assets getting a little bit of a reaction off of that, seeing higher highs for NASDAQ as we come up into the higher high region. Had some wick wackiness last Friday. Glad I took a day off for trading on that day as we play with the higher high regions. All right, and let's go back to BTC and wrap it up in a nutshell. Let's see if you have anything to request, and then we'll bid you adieu. I have to be on my way. I have a lesson to teach in 15 minutes. I have to prepare for that. So what we're looking for, BTC holding. We're getting some ambiguous signals here, not as clear as before. Last Sunday was much clearer up in here with all these cross down signals and suppressions by the baselines, just insinuating that downside in advance. Here we're getting a little bit of mixed signals, upside signals and downside signals, which is why we're saying it could come down to go up. And that is our story, and we're sticking to it. And more often than not, it plays out as we say. So hold us to the flame tomorrow and see what happens. As of this moment in time, you're getting the hourly cross down event, insinuating you could be coming down to here. Going back to the liquidity, you do have a thicker band of longs down in that region to clean up. So coming down to that region and recovering this wick at 41,233 would be something we would like to see. 41,233 would put you right at that 786 level, and then watching for a reaction off of that. That's my story, and I'm sticking to it, folks. Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for coming on in each and every day.